Hello everyone. Today we're going to have a brief market recap, then talk about the German CPI, the US ISM index, and US construction spending coming out. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my opening market comment. Well, it's a risk-on day today as the Caixin China Manufacturing PMI beat expectations handily. The index rose by 1 point when it was expected to be unchanged. That created a risk-on tone for the day. The Aussie dollar and New Zealand dollar were the main beneficiaries. The US dollar, as an asset currency, is also higher, and oil gained as well. Now, the European day opened with the CPI for the German state of Saxony. It was sharply higher, with the year-on-year rate jumping to 1.8% from 0.8%. That suggests the national CPI is going to be up sharply too, because, as you can see from this graph, the two of them tend to move together closely. In fact, that's exactly what the forecasts say. The National German Harmonized Index of Consumer Prices, the HICP, which comes out later in the day, is forecast to rise sharply as retail oil prices in Germany jump during the month. That could put a bid under the euro, as it would foreshadow a similar rise in the EU-wide CPI, which will be released on Wednesday. Now, when the US day starts up, the ISM Manufacturing Index and the construction spending figures will be released. The ISM Manufacturing Index is expected to rise a substantial 0.5 point. Now, the corresponding market manufacturing index was up only slightly during the month, but it remains higher. So in this case, the ISM index would only be converging towards it. A substantial rise like that, despite the strengthening of the dollar, would probably be seen as a substantially positive sign for the economy and would probably boost the currency. At the same time, the ISM Prices Paid Index, one of the sub-indices of this ISM Manufacturing Index, is expected to jump a full point. That's a pretty good sign that inflation's heating up. That may reassure the FOMC about rising inflation and help to solidify their resolve to hike rates. So the prices paid figure could also help the dollar. Turning to construction spending, multifamily housing starts collapsed in November. That's likely to weigh on overall construction spending. In that respect, the 0.5% month-on-month increase that's forecast would be a fairly good outturn, in my humble opinion, and could also send the dollar higher. However, I think there's some potential for disappointment here. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.